Juan, can you tell us a bit more about your current role in the World Bank, key responsibilities and projects you're currently working on?
The office where I am is the office of the chief economist. So we do a lot of the analytical work about the challenges that our region will be facing, and our region covers all of Europe and Central Asia. We come from completing a report on restoring the luster of the European economic model, in which we examine in great detail the challenges faced by Europe, what are the things that have worked so far, what are the things that need more change, particularly in Southern Europe, and what are the areas where Europe in general needs to rethink its economic model. That's what we have completed. Going forward, we're trying to focus a little more on the East region that we cover. So we're doing a report on Central Asia. And that report is going to focus a little more on the challenges of diversifying these economies, both in terms of their product exports as well as in terms of their product markets. Being these oil-intensive or oil-abundant countries, we need to focus a little more on how you make these economies depend on things more than oil resources.
Juan, how do you see the economic climate in Europe developing over the next 12 to 36 months?
The challenges ahead for Europe are obviously worrisome. The whole world global economy is still starting to recover from the 2008 global financial crisis. But the challenges of Europe are bigger. While countries like the US and the rest of the advanced and developed world outside Europe are still trying to struggle with the challenges of strengthening their financial markets, recovering export markets, etc. In Europe, you also have the challenge of how you design and modify the European Union and the euro in particular. And I think that's where Europe's challenge is still very much evolving, in the sense that the mechanisms through which Europe can address these difficulties it's facing are not entirely clear. It's not just an economic solution, what they actually need to put forward. It's also a political solution, and that makes it more difficult, because it's always has been difficult to put political solutions rapidly, because you need the political mandate to do so. So that's why we see so much struggle and so much delays on what people at times believe that are easy solutions, and in fact they're not. I still believe that in the case of Europe, we've seen movement in the right direction. There are actions being taken, for example, in the need to strengthen the concept of banking union and the design of a banking union in support of the euro common currency. So I think that's areas where you have seen useful and productive debate, and some changes already being announced. The timeline of their introduction is what remains very uncertain, and I think in that respect we'll have to see how things evolve in the coming months and year. But we've seen Europe go slowly, perhaps, in the right direction, and we'll have to see how this evolves in the next 12, 24 months. We're not out of the woods, but I'm still very hopeful.
So you think it's not all gloom and doom in Europe?
No, I actually think that Europeans have to restore a bit of that confidence on the European economic model they had. It is a region of the world that basically had an economic model that balanced growth and equity, market behavior with trying to protect the well-being of people. And there's nothing that one can say negative about that. In fact, I think it's a great model to have. But yes, there are parts of this model that will need to be tinkered with, and I think that's what politicians and Europe as a whole are struggling with. I think some of the things on which they have depended so heavily in the past, like the social economic model, will have to be in particular modified, and this relates to the labor and size of government and what's the government role. These things will need to be rethought so that you have a more balanced Europe, so that the parts of Northern Europe have more or less the same incentive frameworks than the parts that the southern European economies. But there are other things that can easily help Europe strengthen their growth prospects, which have in particular to do with a single market for goods, services, capital, and labor, where I think Europe has made great progress in some of these four freedoms and less impressive progress in other parts of these four freedoms. And the issue is really trying to make them deeper and make these freedoms even more important to the future of Europe, as opposed to trying to go back inside the borders of individual countries.
So how should CFOs and business leaders in Europe respond to changes in the economic climate?
Well, obviously, the times we are living today are more complicated than those we had pre-crisis. Pre-crisis, there was, if you wish, global abundance in every area, liquidity abundance, economic growth was perhaps even higher than growth potential. And as a result, it was perhaps easy to be a CFO in the sense that you didn't have to face significant budget constraints. And I think every institution and every enterprise has gone through the same abundance period. When times are leaner, things are meaner. And as a result, you need to focus on the bottom line much more closely. And I think that's where CFOs probably have a greater role today than they had pre-crisis. Going forward, they need to prepare also for the challenge of a world that is going to be different and a world where investors, I think, are going to be much more selective. And therefore, the CFOs will play an important role in helping the bottom line of their companies so that they can outlast this difficult time and outperform when things return to a more normal level in the future.
So how do you see things in Europe progressing over the next 12 to 36 months?
I think the world faces several challenges. In the U.S., for example, the so-called fiscal cliff is the issue today. What is somewhat encouraging after the conclusion of the electoral period is that the two parties that you have in the U.S. seem to be talking about finding a common ground. And I think that's productive. It's something that many people feared prior to the elections, that we might have a stalemate. I think the markets reacted also somewhat negatively after the elections were concluded, not so much about who won or who lost, but about is the stalemate going to continue. And I think the conclusion one can derive today is that they seem to be talking, the parties seem to be talking. There was even articles in the Financial Times of today in which the advisors to the losing presidential candidate talk about how to reach some agreement about the fiscal cliff. So that's on the U.S. side a hopeful development, not obviously one that we have concluded, but at least give some hope that there might be an effort to resolve these issues. In the case of Europe, I think that the challenges are also perhaps more difficult, and the reason being that you're not talking about two parties within the same country, but you're talking about political parties in many different countries. And obviously that makes the challenge a greater one. Now, I have to be positive and also have to try to emphasize that I think Europe has achieved a lot over the past 4 or 5 decades, ever since the European Union started to be shaped. And I think Europe needs to look at those accomplishments, and by looking at those accomplishments, try to make the argument that there is more to be done, and there is very many positive things to derive from these efforts to do more. And I think that's the challenge. I do believe Europe will rise to the occasion. It's just going to be more difficult by definition because there's lots of countries involved and many different countries involved. But I'm still very hopeful.